57 minutes ago, everything changed. The precious metals rally that had everyone convinced we were heading to $5,000 gold just hit a wall. Gold, which was trading at $4,488 per ounce, is now in a sharp retreat. Silver, which hit $80.62, is pulling back hard. And the mainstream narrative? They're calling it profit booking. They're blaming dollar resurgence. But what they're not telling you is far more explosive. What's really happening right now is a coordinated index rebalancing event that's forcing institutional selling. And if you don't understand what that means, you're about to get destroyed. Stay with me, because what I'm about to reveal will completely change how you view this market. This isn't just a normal correction. This is the setup for either the biggest buying opportunity of the decade or the beginning of a catastrophic collapse that wipes out unprepared investors. By the end of this video, you'll know exactly which scenario we're facing and what you need to do right now to protect yourself. Let me start with the breaking news that's sending shockwaves through trading desks worldwide. January 7th, 2026, 57 minutes ago. Financial content via WRAL Markets reported what they're calling a massive profit booking event in precious metals, gold retreating from $4,488, silver pulling back from $80.62. Both metals sliding hard on Wednesday after yesterday's Venezuela-driven surge that had everyone euphoric. The official explanation? Dollar resurgence is halting the rally. Profit booking after 2025's historic gains. But let me tell you what's really happening here. First, let's acknowledge the elephant in the room. 2025 was absolutely insane for precious metals. Gold gained 64%, silver gained 147%. Those aren't normal returns. Those are generational moves that typically happen over decades, not single years. So yes, some profit taking is natural and expected. After a year like that, traders will lock in gains. That's trading 101. But here's what makes this situation completely different from normal profit taking. The timing, the mechanism, and the forces behind this sell-off that mainstream media isn't discussing. Let's break down what's actually happening. The dollar resurgence narrative is partially true. The US dollar index has been strengthening over the last 24 hours after weeks of weakness. When the dollar strengthens, it typically puts pressure on dollar-denominated commodities like gold and silver. That's a well-known inverse relationship that's been consistent for decades. But the dollar's move alone doesn't explain the magnitude of the sell-off we're seeing. The dollar isn't surging, it's recovering modestly from oversold conditions. So why are gold and silver retreating so aggressively? That's where the index rebalancing story becomes absolutely critical to understand. Here's what most retail investors don't know. Major commodity indices periodically rebalance their holdings based on market capitalization, liquidity, and other technical factors. When an index rebalances, funds that track that index must buy or sell specific commodities to match the new allocation. This creates forced, non-discretionary trading. And when you have billions of dollars in index tracking funds that must execute trades, regardless of market conditions, you get massive price movements. That's what's happening right now. Index rebalancing is forcing institutional funds to sell gold and silver positions to reallocate capital. It's mechanical, not fundamental. The selling isn't happening because institutions suddenly think gold is overvalued. It's happening because mathematical formulas in index construction are dictating the trades. This is why sophisticated traders are watching this sell-off very differently than retail investors. Retail sees panic. Institutions see opportunity. Because when forced selling creates artificial price pressure, when mechanical rebalancing pushes prices below fair value, that's when smart money accumulates. But here's where this gets complicated. Not all sell-offs are created equal. Sometimes forced selling triggers cascading liquidations that spiral out of control. If enough leveraged positions get stopped out, if enough margin calls force additional selling, what starts as mechanical rebalancing can become a genuine crash. So the critical question isn't whether this is profit booking or rebalancing. The question is whether this sell-off will be contained or whether it triggers broader liquidation. And to answer that question, we need to look at the technical levels, the sentiment indicators, and the fundamental backdrop supporting precious metals. Let's start with the technical picture. Gold at $4,488 was testing recent highs. That level represented significant resistance. When resistance holds and price reverses, you typically see profit taking from short-term traders who bought the breakout. That's exactly what's happening. Silver at $80.62 was even more extended. Silver had been outperforming gold for weeks, driven by industrial demand and speculative positioning. When the most overextended asset in a sector starts pulling back, it often leads the broader correction. Silver's weakness is telegraphing what might come next. The key technical levels to watch: for gold, $4,300 is critical support. If that breaks, we could see $4,000 tested. For silver, $75 is the line in the sand. Below that, and we're looking at potentially $70 or lower, But here's what the technicals don't tell you. Markets don't trade in a vacuum. The fundamental reasons gold and silver rallied in 2025 haven't disappeared. Central banks are still accumulating gold at record pace. Geopolitical tensions haven't resolved. Currency debasement is accelerating. Inflation remains above target in major economies. The dollar's resurgence, it's happening because markets are anticipating the Federal Reserve might hold rates higher for longer. That's dollar positive in the short term. But longer term, if higher rates trigger economic weakness, if they force the Fed to eventually cut aggressively, the dollar will resume its decline. And when that happens, when the dollar's current bounce exhausts itself, gold and silver will likely resume their uptrends even more aggressively. This is why I keep emphasizing the distinction between short-term noise and long-term trends. Right now, we're experiencing short-term noise. Profit booking after historic gains? Absolutely. Index rebalancing creating forced selling? Yes. Dollar bounce putting pressure on commodities? Correct. But none of this changes the fundamental case. The fundamental case for precious metals remains as strong as it was yesterday, last week, last month. The structural factors driving the bull market are intact. What's happening right now is a shakeout. It's the market purging weak hands, over-leveraged positions, and short-term speculators who don't understand what they're holding. And this is where fortunes are made or lost, because the investors who panic and sell into this weakness will watch helplessly as prices recover and march higher, while the investors who understand the bigger picture, who recognize forced selling when they see it, will use this dip to accumulate at better prices. Let me give you some historical context. In every major bull market, you see these violent corrections that convince everyone the rally is over. Gold's bull market from 2000 to 2011 had multiple 30 to 40% corrections. Each time, people declared the bull market dead. Each time, gold recovered and eventually made new highs. The current bull market, which began in late 2022, has been remarkably smooth until now. We haven't had a significant correction. We've had minor pullbacks, but nothing that truly tested investor conviction. This might be that test. And if history is any guide, if the fundamental drivers remain intact, this correction will ultimately be viewed as a buying opportunity. But I need to be clear. I'm not telling you to blindly buy this dip. I'm telling you to understand what's happening and make informed decisions. If you're over-leveraged, if you're trading on margin, if you bought at the absolute highs yesterday, this correction could be painful for you. But if you're holding physical metals with a long-term perspective, if you understand the macroeconomic forces at play, this is just noise. The profit-booking narrative that mainstream media is pushing serves a purpose. It provides a simple explanation that doesn't require understanding complex market mechanics. Index rebalancing? That's too complicated for a headline. Dollar resurgence? That's easy to explain. So they focus on the simple narrative. But as an informed investor, you need to look beyond the simple narratives. You need to understand the mechanical forces, the technical levels, the fundamental backdrop. You need to recognize when selling is forced versus discretionary, when weakness is an opportunity versus a warning sign. Right now, based on everything I'm seeing, this looks like forced selling creating a short-term buying opportunity. But I'm watching those key support levels. If gold breaks $4,000 convincingly, if silver breaks $70, then we might be looking at a deeper correction that could take weeks to resolve. But if support holds, if we see buying emerge at these lower levels, this could be a very brief dip that resolves quickly. The next 24 to 48 hours will be critical. We'll see whether buyers step in or whether sellers remain in control. We'll see whether the dollar's bounce continues or exhausts itself. We'll see whether index rebalancing selling completes or whether it triggers broader liquidation. And that's why you need to be watching this closely, not panicking, not making emotional decisions, but monitoring the situation with clear eyes. Here's what I'm doing personally. I'm watching those support levels. I'm monitoring dollar strength. I'm tracking sentiment indicators to see if we're reaching capitulation. I'm not selling my core position in physical metals. That position is based on long-term fundamentals that haven't changed, but I'm prepared to add to positions if we get significant weakness that creates compelling value. And I'm prepared to be patient if this correction takes time. Because ultimately, the biggest mistake investors make in bull markets isn't buying too early or selling too late. It's panicking during normal corrections. The investors who made life-changing wealth in the gold bull market of the 2000s weren't the ones who timed every top and bottom. They were the ones who held through the volatility, who understood the bigger picture, who didn't let short-term noise shake them out. Here's my call to action for you. First, if you found this analysis valuable, if this helped you understand what's really happening, hit that like button. Subscribe to this channel because I'm going to be covering every development in this story. I'll update you on the technical levels, the support tests, the dollar action. I'll break down whether this is a buying opportunity or a warning sign as the situation develops. You don't want to miss these critical updates. Second, drop a comment below. What are you doing right now? Are you buying this dip? Are you waiting for lower prices? Are you concerned about deeper correction? I want to hear your thoughts. I'll be reading and responding to comments. This is a community of informed investors, and we learn from each other. Third, do not make emotional decisions based on fear or greed. This is the time for disciplined, thoughtful analysis based on data and fundamentals. If your investment thesis hasn't changed, if the reasons you own precious metals are still valid, then short-term price action shouldn't dictate your strategy. Fourth, share this video with anyone who's freaking out about this sell-off. Help them understand what's actually happening versus what mainstream media is reporting. The more people who understand the mechanics of index rebalancing, dollar dynamics, and profit booking, the better decisions they'll make. 57 minutes ago, everything changed. Gold and silver entered a sharp retreat. Dollar resurgence and index rebalancing triggered massive selling. But this isn't the end of the precious metals bull market. This is a test, a shakeout, a moment that separates informed investors from the crowd. Stay disciplined, stay informed, watch those support levels, and I'll see you in the next update as this situation develops.